What's up, you guys? It's Benson right here. I'm super excited to bring you today's brand new video. In today's video, I'm going to show you step by step on how to pass a proprietary firm account so you don't get to lose it. Now, with the popular prevalent in the industry, most everybody is trading proprietary firm, and you know the statistics. Most people are losing it. So I don't want people to keep losing their proprietary firm account. So that's why I'm out here to explain to you guys how you should not lose a proprietary firm and how to actually pass it step by step, and how I also do pass my own personal proprietary firm. So step number one, you have to carefully select a proprietary firm that personally fits your own trading style. What I mean by selecting a proprietary firm, you have to make sure that it's a proprietary firm that pays out fast, it's a proprietary firm that also accepts payments in your own local currency, proprietary firm that also allows swing trading, day trading, and every type of trading condition, and also give you enough time to want to pass your account. And one more thing, make sure you read their rules. Some of proprietary firms, they have hidden rules, that's true. But if you actually calm down, check other people's experience on Trustpilot, check other people's experience on your Instagram page and all of that, you'll be able to better tell whether or not they are hidden rules or not. But the key thing is make sure you read their rule that is stated in their website, so you don't get to start using EA when you're not supposed to use EA in that particular account. Step number two, you want to make sure you fully understand the company's requirements and make sure you have all the documents necessary that you will need for verification. For example, most proprietary firms will want you to verify before withdrawing your money at any time when you pass, all right? So you need to have your valid means of identity and sometimes bank statement. Make sure you have all these documents handy before you get into the nitty-gritty of actually trading this account. The third step, which is going to be the most important step in this whole video, is you demonstrating your trading skill. Now, in demonstrating your trading skill, you have to understand that there are different types of market conditions in Forex. We have trending markets and we have ranging markets. So if you trade one pair, just as I do, like GBP/USD, first you have to determine what type of market that we're currently in. In times when we're in trending market, you know what I do? I love to employ trending market type of strategy. So the most problem we have as Forex traders and trading proprietary firm is we tend to take up challenges in a training market. Then at some point before we pass, the market changed from training market to consolidating market. So what happened? We still try to apply the same strategy that we would use in a training market. We start forcing it on a ranging market. So you have to make sure you know what type of market that we are currently in. So that's why market structure is super duper important. Now, this is irrespective of what strategy you're using. You might be using SMC, you might be using my personal strategy, you can be using ICT, you can be using any type of strategy at all. Market structure is key, price action is key. You have to know what type of market condition that market is right now in so that you'll be able to further approach the market the right way. The first step, after you finally know the structure of what the market is, make sure you use the right lot sizing. I usually advise that you shouldn't risk more than 0.5% of your account to 1%. Now here's the reason. In proprietary firm, you always have to ask yourself these questions. What are the chances of me losing 5 trades in a row? Because most times they give you 5% daily drawdown, while some other give you 6% daily drawdown that are very graceful. They give you 6% daily drawdown. But let's use 5% daily drawdown as an average calculation right here. So the calculation will be, if I'm risking 1% every day, what are the chances of me losing 5 trades in a row in order for me to be out of this challenge? If the chances are high, you want to consider dropping it to 0.5% per trade. If the chances are very low, then good, you can go on with your 1%. But this would be a rather perfect strategy that you should use in risking, in terms of lot sizing, in terms of stop loss placement and everything. Every day when you wake up, decide to risk 0.5% of your account. So for example, you pick up an account of $100,000. Risking 0.5% of your account will mean that you'll be losing $500 in any trade that you take, that if it's whipsaws. One thing about risk management is we calculate whenever things go bad, not when things are going well, because that's the essence of trading. We want to make sure that we tighten the odds of things going bad against us, and then we increase the chances of things going in our favor, and then we maximize the move. So if things go bad, you'll be losing $500 in a day. And if things go well in your favor, you should be targeting 1 to 2. That is $500 if it's against you, if it's in your favor, $1,000 in profit. So when you're $1,000 in profit, what you should do is start scaling up. Do not risk 0.5% again. Now you can go ahead and start risking 1% of your capital in total. So what that simply means, you're not just going to be risking the amount of money, the threshold which you started with, you are now risking the profits which you have made previous day before that time. All right? And one key important thing, if you find out that you're already losing, you're close to your daily drawdown, that day, stop trading. It is very important. Stop trading. Wait for 12 a.m. for your trading account to reset and your risk account, everything to reset, so you can start placing new trade and you start off based off of a new chapter. Then the last part, which is the fifth step, is you have to make sure that you learn to withdraw. Now, I've noticed some people, each time they pass their phase 1 account, they pass phase 2, and then they don't get to withdraw at their profit stage because, and these guys will go ahead and make about, say, about $10,000 or $12,000. I've seen a guy who made about $15,000, but he didn't withdraw. He kept trading. So the best advice, since there are no minimum trading days at your funded stage, I would always recommend, hold on, hold your breath for the next couple of days, wait for your withdrawal date, and then pull out your money first. Remember, one of the big advantages of putting out your money first is whenever you request for a withdrawal on your first one, the money which you pay gets refunded back to you. You get a refund of your fee that you paid first. At least, if not for anything, that would be one of the most satisfying breaths like you would ever take in your life, because getting your money that you pay for exam fee back, that's no brainer. So for that reason, even if I were your shoe, if I make $5,000, if I make $1,000, I'm just going to be holding my breath, pull out, request for a withdrawal, not until I get a refund first of my money. I'm not going to start trading another one. So make sure you learn when to take profit, learn to say it is enough, and when you get your maximum daily loss, make sure you also set a personal maximum daily loss for yourself. Max daily loss. For example, my max daily loss every day is $3,000 on a 100K account. Yours might be less, depending on your risk appetite, and yours might be more. Obviously, risk is relative. So these are the things that you just have to know, put into cognizance. I'm sure with these few steps, you must be able to pass your next prop firm account. And before I go, I want to like to give you guys a hint of the prop firm account I use. When you check the link in the description box, you find out that there's a link to a prop firm that I do recommend, which is Consummate Traders. Consummate Traders is one of the best prop firm right now, if not the best prop firm. Why? Because of the maximum daily loss, and which is 6%, and total loss, which is at 12%. No any prop firm offers that. And then there's 60 days for you to pass phase 1, 60 days for you to pass phase 2, which is the best trading condition you can ever find out there. All right, use the link right now, sign up for Consummate Traders, and then you can start trading. And then you should be able to cash out money. Each time you make profit, please do not overtrade, know when to stop, and then request for your withdrawal. Do not start trading the account not until you get your first withdrawal, and then you reset the next month again, then you can start hitting it hard based on your risk appetite. So if you like this type of video, I'm sure you must like my channel. Please kindly go around, check other videos, engage with some other content that might also help you. And do not forget to subscribe and like. Share this video with friends and loved ones. See you guys in the next one. Bye.